Have you ever just looked at the stock market and thought to yourself, this makes absolutely no sense? You see a stock with zero earnings just blasting off to the moon, while some really solid, profitable company just sits there. If you felt that way, you are definitely not alone. It really makes you wonder, is the stock market we all think we know fundamentally broken? Let's dig in. And it's not just a wild idea. This is the core argument from some of the most seasoned people watching the markets today. They're basically saying that the old rules, value investing, digging through earnings reports, all that stuff, it just doesn't pack the same punch anymore. They believe the market's very DNA has been rewritten. Okay, so if that old, reliable market is gone, what are we left with? Well, it turns out it's not just one thing. What we have now is this chaotic mix of three enormous, powerful forces that have completely changed the game of how stock prices are even decided. So let's break down exactly what they are. The first force, and you could argue it's the biggest one, is something that happens quietly, almost invisibly every single day in millions of our retirement accounts. It's the absolutely unstoppable rise of what you could call the automatic or passive investor. So the idea here, right, it's not about being a stock-picking genius. It's just about buying the entire market, usually through things like ETFs or index funds in your 401k. Think of it like putting your investing on complete autopilot. And its growth has been, well, nothing short of explosive. I mean, just look at the scale of this thing. For more than 10 years now, the trend has just been a one-way street, straight up. More and more of our money is flowing into these strategies that are, and this is the key part, price insensitive. They aren't buying a stock because it's a good company. They're buying it simply because it's on the list. So why is everybody doing this? Well, this number right here, it tells you pretty much the whole story. Over a 10-year stretch, a whopping 90% of active fund managers, these are the highly paid pros whose entire job is to beat the market, they fail to even match the index. When you see a stat like that, you start to ask yourself, why am I paying extra for someone to lose to the average? But what happens when the market goes on autopilot? Well, you get some very real and pretty wild consequences. With over half the money just along for the ride, there are fewer active buyers and sellers to absorb shocks. That means you get bigger, crazier price swings. And the money? It all gets funneled into the biggest companies. As they get bigger, the index funds are forced to buy more of them, which makes them even bigger. It's this powerful feedback loop. Okay, so if that first force is like a huge, slow-moving tide of automatic money, this second force is like a lightning-fast war happening right on the surface. This is the high-speed, algorithmic battle to decide what a stock is actually worth, and it's happening in a place most of us never even see. To really get this, you gotta understand there are basically two different arenas. You've got the spot market, which is where you or I would go to buy an actual share of a company. But then there's the derivatives market. That's where traders make super fast, low-cost bets on where that stock price is going. And that's where the real race to find the true price happens first. This whole thing is called price discovery. See, when some big news drops, the algorithms in that faster, cheaper derivative market react in microseconds. They set the new price almost instantly, and then the slower spot market basically has to play catch-up. The price you see on your screen has often already been decided in this high-speed robot battle before you've even finished reading the news headline. And that brings us to our third and final force. And this one is maybe the most human and chaotic of all. This is where the market stops looking like a neat spreadsheet and starts acting a lot more like a social network. It's a world where a powerful story, a compelling narrative, can just completely overwhelm the actual numbers. The last few years really created the perfect storm for this. You had stimulus checks and free trading apps bringing millions of new people into the market. Then the whole GameStop saga proved that a crowd of regular people armed with a good story could actually take on Wall Street. And we're seeing it right now with the AI narrative, which has sent a handful of stocks into the stratosphere, all based on a story about the future. I mean, just look at this disconnect. It's wild. At its peak, Tesla was worth over $1 trillion. That's 20 times more than Ford, even though it sells just a tiny fraction of the cars. So why the huge gap? It's the narrative. The story around Tesla wasn't about selling cars. It was about inventing the future. The story just became way more powerful than the balance sheet. And what this all means is that the very idea of investing has kind of split into two. The traditional way asks a simple question: what is this company actually worth? But narrative trading asks a totally different question. Will someone else, caught up in the story, pay me more for this tomorrow? It's a huge shift from investing in value to just speculating on belief.
So, look, when you take these three incredible forces and you smash them all together, you don't get a temporary trend. You get a completely new machine, a market that runs on a totally different set of rules. This isn't just a phase, this is the new normal.
So let's just put it all together one more time. You've got this immense, constant pressure from passive funds buying whatever's biggest. On top of that, you have algorithms setting prices in the blink of an eye. And then you've got the wild card, millions of connected traders who can swarm around a story and push a stock to unbelievable places. These three forces are always interacting, creating the crazy, complicated market we have today. And make no mistake, this isn't some bubble that's just gonna pop and everything will go back to the way it was. The technology behind free trading, the social media that spreads stories like wildfire, the algorithms that decide the price, none of that is going away. The very architecture of the market has permanently, structurally changed, which leaves us with this one final, profound question. In a market that's driven by algorithms, autopilot investing, and viral memes, what does the word value even mean anymore? For an average person just trying to save for retirement, or for an economy that depends on the market to function properly, this isn't just some interesting thought experiment. It's the central challenge. The old map is gone, and learning to navigate this new world means accepting that the rules of the game have fundamentally and forever changed.